The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 16th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. And in honor of it being Fantastic Friday, this is the tool we call Treat Your Body Like a Temple. You know, ancient scripture says, treat your body like a temple. So the question is, do you treat your body like a temple? You know, something that you take extremely good care of, or do you treat it like a woodshed? Here's the thing. Our mind and our body work together. We've got to have both functioning well. Our body is the support system for our mind and our spirit. Our bodies support us with the strength, with the power, and the vitality to take us where it is that we want to go. Now, the cool thing is that we only need 30 to 60 minutes each day to have a strong, healthy body. A few simple things will go a long way. For example, take the stairs instead of the elevator. You know, when looking for a parking space, this one, I always use this one. When looking for a parking space, don't look for the one at the front door. Look for the one at the end of the parking lot. You know why? There's a whole lot less competition for those spaces in the back of the lot, and you end up with fewer, usually no dings on your car. If you don't like to jog, well, then walk and do that every day. If you don't like to walk, then swim. I like to do that every day too. If you don't like either of those, I don't know, take up a sport. Play tennis, or if you like to play golf, have your buddy drive the cart and haul the clubs while you walk the course, or you walk the majority of the course. You know, it's all about the strength of our muscles, and the muscles of our mind need the muscle of our body. Treat your body like a temple, not a Shirley Temple. And that's what Fridays are all about here at TFNN. When we've got from 12 to 1, Nico and Paige. So make sure you tune into that show. It's a great show out there. Let's go check out these markets here. Right now, pretty flat market. Dow futures off 2 points, trading out at 15,068. S&P futures up 1 point at 1656. NASDAQ futures up 5. Russell 2000 basically flat. King dollar flat. Not a lot going on inside the currency market. Goldilocks is up $6 right now, trading at 1366. You've got silver up 5 cents. Not a big deal out there. Light sweet crude is flat. Natural gas is down in nickel, probably the biggest move there. Let's just go to the beach. Let's just call it a day. Call it a week. Call it a weekend. Looks like maybe today we're going to have a relatively flat market after all of the fireworks from yesterday. If we go take a look at what's going on around the world, you've got the DAX off 32 points. Really not too bad considering our fireworks that we had here in the market. The FTSE, that's down 3 points, so that's flat out there. Kind of a wild day over in the Hang Seng, but it finished down basically flat, off 21 points. Nikkei was up 102. Our call number is 877-927-6648. So on a flat day, where is it that we should begin? Let's go take a look at the 120-minute chart here on the S&P futures, see what we've got going on. Now, we know that yesterday, as we were coming into that 9:30 area, that 23-point consolidation range, that's if you're watching us on TigerTV, that's the yellow shaded box, or at least it's yellow shaded on my screen here. That the S&P futures have been trading in for basically about a month. So relatively tight trading range of 23 points. When you break a consolidation area, the move is going to typically go equal to or exceed the amount of the consolidation. We saw a breakout of this consolidation range, taking us back here into the time frame of August the 1st, right around 1:30 in the afternoon. That turned out to be a false break as price broke back inside. Now, when price breaks back inside a consolidation, that means it'll go down and test the bottom. Well, it finally got down to the bottom yesterday, but when it sliced through that, it sliced through it just like a hot knife on butter. Yes, the market was moving into an oversold position. But remember, in the bear market, markets will push into that oversold. They'll continue to push lower. It's got to work its way off, but it's no problem for it to push lower. Just like in bull markets, they can push up into the overbought condition. They'll end up working its way off, and that's in essence what we really had here. Now, the 23-point move would have taken us down to 16.50, and I'm not saying we're not going to get down there. Right now, it's you got down to a low of 16.54 out there, so not too bad of a move. Maybe I overcooked the 23-point move. Maybe it was just a 20-point move or so. Actually, I think it is 23 points. In any event, the market did move down, got in that extreme oversold condition going into yesterday's close, really at about the 5:30 time frame when it started working that condition off. Got a nice little bullish candle out here. That bullish candle, bullish engulfing candle, taking us into the 7:30 time frame. That says 1654.25 is a support area today. We've seen really three, so we know where the bulls are defending their position. Again, 120-minute chart is what it is that we're looking at. The reason I say that is because we've got bullish engulfing after bullish engulfing after bullish engulfing. So Uncle Ben, maybe it's Super Mario, whoever it might be, they're really defending this area here of 1654.25. So based on the one-day VIX rate of change out there, you know what that says? That says that we're probably going to have a flat market. Maybe we've seen all the bounce. I don't think we have. I think we're going to see the market bounce a bit more out here today. In fact, where would that bounce take us to? In fact, on this 120-minute chart, what you would do is just come up to the most recent swing point high. That would start us off at 11:30 in the morning on August the 14th, the top of that 1693.25. Just go from that high down to the low that came in here. You could say it could be the low that came in at 1:30 this morning, down at 1653.75. It's going to take you in the 1669-ish area. You're at 1658 right now. So, look, if you do get a bounce up to that area, what I suspect is we'll get a bounce intraday. Maybe we get a bounce up to that area intraday, and then the market probably pushes lower. But the selling is not over. All that's really taking place out here, and it's done its job so far on the 120-minute chart because we're looking at a longer time frame here, just working off an oversold condition. That's what the market will do. That's why I want you to use that relative strength indicator at the top, at the bottom, looking at the 30-ish level, looking at the 70-ish level, because it'll help you to understand what's going on with inside your own trades, whether it's daily, weekly, intraday, 120-minute chart, 60, 30, whatever it is that you might trade out there. So that's what's going on inside the ES Mini. If we go dive down just a tad further, take a look at the 30-minute charts for each of the futures contracts out here. If we start off and take a look at the Dow, go see what the Dow here was doing on the 30-minute chart. You can see really moving into that extreme oversold level here yesterday morning at about the 11 o'clock time frame. We then saw a market move basically sideways. Made its low at 5:30 last night, pushed low coming into the close. That was really to be expected out there. And then what we've seen now, to work off an oversold or an overbought condition, market has really two choices. Either work sideways and digest it, and you can see that in essence is really what has taken place here. That's the most bearish of a way to work off an oversold, or the most bullish, depending on which side of the, the bullish would be on an overbought condition, the bearish on an oversold condition, because you're not really getting much of a bounce, just simply working sideways to try to push lower out there. But as we take a look at the larger term time frames out here, what we see, or what we're going to see, is we're going to see the markets that are up against support levels. Not that those support levels can't be broken, but it is a Friday. A lot of folks out at the beach out there, and maybe you're listening in from the beach. I hope that you are, or that you're going to head out to a beach somewhere near you this time. Well, of course, if you're in the mountains and you're listening to us and you're not anywhere near a beach, I hope that you're going to go do some hiking up inside the mountain. So you can see on the intraday chart, on the 30-minute chart here, that was the Dow. Let's go take a look at the ES Mini, since we were taking a look at the 120-minute chart out here. Again, you see the same thing. You can see the market's moving into that extreme oversold territory, making its final low here. Well, final low, since we were last with you, coming in at 5:30 last night, down at 1654.25, and since then, just really gradually working its way sideways out there. That black squiggly line, that's the 200-period exponential moving average. That would be a heck of a move. Let's see here. That's would take you into about the. Do I have that on here? Looks like 1675 out there. I don't suspect that that's what we will see in the marketplace. I did mention the longer-term charts here. That would be the daily chart. So let's go take a look at the daily chart here for the ES. Now, We looked at this yesterday, and what I mean by yesterday, we took a look at 50-day exponential moving average. That's the blue squiggly line going across my screen out here. So if it closes below that, trust me, that'll really pique the interest. And it's that same way in the index itself. But right now, you've got the ES Mini traveling below that level. 1659 is where it's at. We're trading at 1657.50, so no need to truly worry right now. But that's an area that has acted as support, with the exception of really two times after really coming off of the lows back in November of 2012. The first time that area broke was for one trading session, which was back on December 28th during those real scary fiscal cliff times. But price immediately bounced back up on the very next session on December 31st. And then the last time that it broke through it was on June 20th. In fact, if you take a look at yesterday's candle here versus the candle really from June 20th, you can see we've got a similar pattern going on here. Take a look at the prior day. The prior day here, you got a nice bearish engulfing candle on June 19th. See how it engulfs that prior session of June 18th? We had the same thing take place here on August the 14th. That was a bearish engulfing candle, engulfing the session from August 13th. So here at this high, we have the same thing going on at this high. Then followed up with what? Followed up with a similar candle. A little bit worse because it really closed at its session lows out there, but this was close enough as far as types of power and strength inside a candle. You know, if we call type 1 the strongest, we'll call them both type 1s. Maybe this one here on June the 20th was a 1.2 or something like that. But in any event, still a strong candle. Markets don't end on those. Of course, we did have almost a 13% rate of change in the VIX index in one day. That suggests really a sideways market, or if it pushes lower, just a tad lower, or bouncing up and down throughout the day. Really the same thing that we had take place here on June 21st. Now, obviously, the ES Mini, quite a ways away from testing that trend line. That's really where it wants to head to next, but probably not today. Maybe it's next week, maybe it's Monday, it's Tuesday, but that's where the ES Mini wants to head to, is the bottom of that trend line. And then it's going to be a question, hey, are you going to go visit June 24th or what? And if it does, it'll break that trend line. 877-927-6648.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at some of the stocks out here with earnings after the bell yesterday, before the bell this morning. We'll start off with Aspen Technology, AZPN. Looks like it is going to break out, at least at the open today, over a resistance area out here. Again, the ticker symbol AZPN. They're in the software business, the logistics business out here. It is trading right now. Last trade fired off at 35.68, up 12% out there. And, yeah, quite a few trades in the $36 area. Now, we're taking a look at a weekly chart. On this weekly chart here, you know, one of, for those of you that like moving averages, I like the cluster. I like finding those rainbow convergence areas of the 8, of the 50, of the 8, 21, 50, and the 200 period. Those are the 4 squiggly lines that you see on my screen out here. Whenever you see those come together, this little convergence right here where they're all meeting up, what you're waiting for is to see which way it is that they're going to separate. And they really give you a ton of information with regard to momentum. I love momentum. Especially when you see a change in momentum out here. Well, in the case of AZPN, again, that is Aspen Technology. And they were out with numbers after the bell, I believe it was last night. Q4 revenue $83 million versus $64, so a nice job on the top line number. Let me see if I can find the bottom line. They did net income of $22 million versus a loss of $3.5 a year ago, so they're getting a nice little reward here. Now, as we take a look at you can see how those 4 moving averages, when they went ahead and exploded, you know, they're a little bit of a lagging indicator out there, but a nice tool to be able to apply. And it works on all time frames, all instruments out there, so it's something you might want to consider as one of the tools that you have inside your bag, your arsenal out here. Now, what we're also taking a look at, which is not a lagging indicator, it's a leading indicator. It's what are the bulls and bears communicating to us. Not a weekly basis here. We saw the market move up, get a little bit tired here on March the 15th. Little doji. In fact, you had 2 dojis right there. Now, it said the market was tired. That was not a reason to sell at all because of the nice candle formation. You know what I'll call a type 1 candle on March the 8th up there, where it opened at the low, closed at its high. So those 2 bodies telling you the market is tired. It was running a race. It was also where on a weekly chart it was in the overbought condition, but traveling with inside the body of a candle, that's actually bullish, not bearish. The bears actually showed up in this equity here on April the 5th, formed a little bearish engulfing candle that really set up as the resistance zone, the high of the candles that it engulfed. Well, you can see it engulfed the prior 3 weeks out there, going all the way back to that first doji weekly candle on March 15th. That meant the high of that, 32.78, became an area of resistance. Market moves down, not the market, AZPN moves down. What's it do? It gets down towards the 50-day, didn't actually touch it or break through it, goes ahead against a weekly chart, so it's really not a 50-day, it's a 50 period out there, just to make sure that I keep in sync here. because we are looking at a weekly chart. But as it makes its run back up for the swing point again, now that swing point high had 1.6 million shares, so it's not the most liquid of equities out here. As it gets back up there again, it does with 1.4 million shares and forms another doji candle out there. Little spinning top on that following session with 1.6 million, so at least was pushing now into the swing point with volume, 1.6 versus 1.6, so at least it was pushing into it. Then a small little bearish engulfing candle last week out here. This week here, the candle's not going to be, well, we'll see where it actually finishes out at, but with it trading right now at 35.43, it's up and over the resistance area, and that means at 32.78, so long as it closes above it today, will become its next support area. Old resistance, this is a weekly chart, so it has more meaning than a daily chart. Old resistance becomes what? That's right. That becomes a new support out there. Now, trying to figure out where this thing might head to, because this has been basically a rocket ship coming off of the lows going back into 2008. It was a stock that was in the $5 range, $5.50 or so. Looks like the lows out here, not really a great one to be able to draw any kind of A to B equals CD up on this little bugger here. I would say the easiest way to give you an idea of where it would go is take a look at expansions of that first doji high down to the low that was put in, and 34.23, well, it's already trading above that, so we know it's going to do more than the 1.272 expansion of that last set of swing points, and the 1 to 1.618 is 36.07. Could easily get there today. I saw a trade earlier at about the $36 mark out there, so not really an easy one for me to give you an idea of where it's going to. What you'd like to see it do, if you were interested in this equity, is let it go do its thing and then come back and test the actual support area. Let it come back and test the level of about 32.78, have it do it with lighter volume, and then maybe that's a little momentum stock that you could play out there. But that's one that's going to break out today. Also, up large, let's see, up large here today, up about 15%. Ticker symbol is EJ, E-House China Holdings, but that's a stock that closed at $6.33. It's trading right now at $7.21. 877-927-6648. If you give me a call, we can take a look at your stock chart as well. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow down 27 points. Trade out at 15,084. S&P off 4 at 1657. Composite down almost 4 points at 3602. Russell 2000 down 4 as well. 370. Trade out at 1023. Google off 34 cents. Apple up a couple of bucks right now. Microsoft up 3 ticks. Intel up 12. Cisco down 4 pennies. Lead the charge to the upside. How about that? Aspen Technology up $3.31. That's up about 11% right now. Apple just behind them up 240. Rand Gold Resources, GOLD, up about 3% this morning, up 222. Tesla Motor up a couple of bucks. That's up 1%. Sarepta Therapeutics up 6% this morning. That's up a couple bucks and change. Kihu 360. Kihu, not sure how you pronounce it, but QIHU, that's up a couple of percent. Market, the GDX, that's up a couple percent. Of course, that is to be expected out there. Let's see, what else we have moving to the upside. Pandora Media, that's up 5%. eHouse, China Holding, that's at EJ stock, that's up 16%. Royal Gold, that's up about 1% right now. Green Mountain Coffee Roasters up 50 cents. To the downside here, leading the charge, Inter Oil Corp. I believe they were down yesterday. Down again here this morning off $8. That's down 10%. LinkedIn off about 2%, just under 2% right now, down almost $4. Perigo Company, PRGO, off a little under a little over $2, under 2%. Nordstrom's, they were out with numbers. They're down 3%, out with numbers after the bell, trading off $1.78. Celgene Technology or Corp, CELG off $1.70. Icky Bank, IBN is their ticker symbol. They're down about 3. Where did that run off to? It jumped off my chart. Okay. Well, it was there and it's gone, vanished. So. Okay, let's go take a look. Netflix, that's trading off $1.77. Google off $1.54. There we go. There's the icky. It's down 6% off $1.86. Alexion Pharmaceuticals, that's up $1.30. Let's go check in on some of these stocks now. During the next hour, I believe Daryl Martin's not going to be able to be with us. I'll be doing the Nadex Bull Bear binary show for the full hour. I'm going to do something a little different. We're going to take a look. There are a number of stocks yesterday that had some key reversal sessions, all from the U.S. home construction business. So we're going to take a look at those stocks. We'll take a look at that sector out there and see what that is telling us. Those key reversal sessions, they're important to be paying attention to. We'll see how oversold those were. I didn't do a ton of research on it. Figured I would just do it live during the show. So we'll do that during next hour. Now let's go take a look at the indexes, see what we have going on out here. Let's take a look at what we've got to keep our eye on today, and that is the VIX index. Why? Because yesterday it got over that 50-day exponential moving average. The number here today on the 50-day is 1401. It's trading at 1458. So long as the VIX stays above this, got to be very, very careful. Did I say very careful? I mean really careful. Why? Because that's where all the major destruction is done in the market, is when that VIX gets above that 50-day exponential moving average. So a very key number there. Impossible for the bulls to actually take control of the market today. So even on its best session, it's impossible because I don't even remember the number. It's so impossible because they need more issues, more net advancing issues than are actually traded inside the New York Stock Exchange. So we won't even pay attention to that number. It's 4,000 something or what have you. It's a big number. I got Angie in the den asking me. I know I can find it. I just have to open up my newsletter. 4,022 is what it would take. So that's not going to happen today. No chance for the bulls to take charge. But the number here on the VIX you want to pay attention to, 1401. That's the 50-day exponential moving average. And so long as the price stays above that, you got to be extremely careful out there. Now let's go take a look at what actually was occurring and where we're trading into right now. We've got to take a look at the Dow chart. The Dow here trading into horizontal and diagonal resistance. The diagonal resistance, which it has not broken, we'll see if it does here today, is the trend line coming off of the lows from November 16th. That's your first touch point. Your next one is going to be that low on December 31st out there. June 24th, it traded into this area and held. Yesterday, it traded into this area and held and was also trading into the top of that June 20th candle. It's a high-volume bar. 15,105.51. You're at 15,092.61. So that's another number to pay attention to. You get it closed back below 15,105.51 today. That's not a good scene out there. Now, that still fits in with really what we were taking a look at in the VIX with regard to a market that either bounces or is slightly up or flat or what have you. And that's all the work that really needs to be done with regard to that one-day rate of change out here. So even if this area holds, don't get too overly bullish like the selling is over, because that's not the case. Maybe we get a B to a C bounce. I don't know if we will or not. We came down pretty hard yesterday, but inside the Dow you can see what it's up against, and that's the trend line. Now the Dow is the most oversold of all of the 4, 5, 6 indexes that we might take a look at here. So it's down towards that oversold level. But remember, in a bear market, if that's what we're in, if we're in a bear phase here, more than so much a correction, markets will push down further into the oversold territory. That's what they're supposed to do out there. In a bull market, what will happen is it'll get towards that oversold and it'll bounce out of there usually pretty quickly. So that's a signature. That's something that we'll pay attention to. If we go take a look at the Russell 2000, let's take a look at what's going on inside some of the strong indexes here. Gapping down just slightly here this morning. Of course, yesterday was a nice big gap down. Russell 2000 eventually wants to get down and test that May 22nd high out there. Now, man, if it closes inside May 22nd, that is toil, double in trouble or something like that. Isn't that how Macbeth put it out there? 1008.23. That is the top of that May 22nd high out there. That's where it wants to head to. It's at 1025.93 right now. If we take a look at, and the reason why I say that would be trouble is because, that thing broke out of it. Let's take a look at when it actually broke out of that May 22nd area here. The actual breakout took place on July 8th. So it's been above that area, been above with some conviction, and it gets back inside the lower part of the range. Well, that'll set up moving down to June 24th, quite frankly. Let's take a look here at the NDX 100. Let's go see what's going on inside the NDX. The NDX, gapped down yesterday, and it also wants to go test that May 22nd high. It broke out above the May 22nd level. The first breakout was on July 12th. Came back inside there and then tested, and then broke out of it with a nice candle formation on July 26th out there. The top of that in the NDX is 3053. 51. It'll probably be Apple that'll help assist it getting down to that area. So we'll go take a look at that here. Maybe we'll take a look at Apple. Yeah, we'll look at some of the core stocks and see what they're actually doing out here. So the NDX not totally broken down here. If you take a look at the moving averages on my screen, the blue and red squiggly line, that's your 9 and 18 day. When that 9 crosses through the 18 day, that's trouble. That's a lagging indicator, but it is bearish for whatever it is that you would be looking at. We've already had that crossover. That occurred inside the Dow. Looks like I deleted that chart. That's unfortunate. If we take a look here at what have we looked at? Did we take a look at the S&P 500? I can't remember if we did or not. Let's go do that right now. I don't think that we did. So let's go take a look at the S&P 500. We'll take a look at the daily chart. Right now it's trading out at the 1659 level. It is clearly back inside the May 22nd area, so back inside there with some conviction. The dead cat bounce, the 0.382 retracement, that means coming off of June 24th low to the high that was put in on August the 2nd is at 1652. So that's really where it wants to head to, but more likely 1617. That would be normal. It has also broken back below that trend line out there. So it has broken back below that trend line a couple of times. Shortly here, we're going to go ahead and get rid of that with regard to a support or resistance level out there. What the S&P really wants to do is get back and test the top, at least the top of June 24th, which would also really be your 0.786 retracement on the way back. Now, it is up near the 1650 level, is also a primary trading range, so real key is going to be closing below 1650. When it closes below 1650, that's when it sets up the likelihood of that rundown towards that June 24th. Probably a test of the low and then a test of that 1550 primary trading range boundary line. That is from the monthly chart. It's on the daily as well as weekly, but that is a monthly number. And that's probably where the S&P 500 wants to go ahead and pull back to. If we go take a look at what's going on inside the currency market out here, let's take a peek around. Let's look at the daily charts of the currency market. Let's go look at the Queen first. Take a look at the euro. The euro had quite a day yesterday. In fact, if you were watching the euro on a 30-minute chart, it created quite a hammer candle out there. You can see it pushing higher. It looks like it's going to come back and at least test one more time the June 19th level. That June 19th level, the high there at 134.15, that's what set up a really nice Gartley sell pattern. And what the euro wants to do longer term, which is really what's still in play here, is move down to about the 124.49-ish level where it would form a nice little Gartley buy pattern. But what we have to pay attention to is we did have that little rainbow convergence. Remember, we're looking at that one equity. I don't remember the, Aspen Technology, I believe. And you can see that, again, a lagging indicator, nonetheless, one that you need to pay attention to because everything actually inside the euro here is lined up. It's like Super Mario was hanging right out here at that rainbow convergence and has put some energy into it. So if you do get a close above 134.15, and candle-wise, yesterday was a pretty strong candle. You have to admit, that was a strong candle out there. And if we just simply take a look at retracements off of the low from July 9th to the top of the candle on August 8th, it has not even done a 0.382 retracement. So that is kind of interesting, saying there's some residual strength or something more than residual strength still here in the euro. Not really an A to B equals C to up here. That has formed, but, it's gotten back to this 100% move of a move, and it really didn't back off much. Should have at least been able to get down to the 131.52 level. So you say, Steve-O, what does that mean? Excellent question. Let's go find out what it means in the area of retracements by going from our high on February 1st down to the low here. See, the low that I'm going to use here from a retracement standpoint is the low from April the 4th. So the 0.786 retracement level would be 135.03. So if it closes above 134.15, that's where it will head to, 135.03 out there. That is on the Queen. Let's go take a look at some of the other currency pairs. Great British Pound, Japanese Yen. One of our listeners had asked me to take a look at this. This has been traveling in a nice little sideways consolidation range out here. It wants to go up and test the highs being about 153.80 or so. It's trading right now at 152.17. Let's go take a look at that Great British Pound U.S. dollar currency pair. That we had pointed out had formed an A to B equals C to up pattern here. That it has not yet completed. That will take the Great British Pound up to at least the swing point from June 17th. 1.5723 is the 1-to-1. But this is actually setting up for potentially a larger move than that because of that retracement. If we take a look at the retracement of that B to C leg, what we will see here is it was about a 50% retracement. So that says it's got some little energy in that, and that energy could take it beyond the 1-to-1 A to B. Now, if we take a look at the C to D leg, we can notice here that price is moving up along the C to D leg nicely here. What we also pay attention to is this nice little wide-ranging bar here on August 7th, and we can see that the back off here, didn't even make it to really the halfway section of that bar, and then we had really a momentum move here yesterday, a continuation move, at least the way that I like to take a look at these candles and the information that they're providing to us. So you had a nice momentum move. That's what says to me this wants to complete that A to B equals CD pattern up to the 157.22. Let's go take a look at the Japanese yen, U.S. dollar, Japanese yen currency pair first out here, waiting patiently. Well, I guess we could say at this stage this may have formed the 0.786 Gartley buy pattern. In fact, I would have to say that it really did do that back here on August the 8th. So why don't I actually draw that in versus the pattern that we had out there. So that was the pattern that we drew in advance. That's the beauty of those Gartley and butterfly patterns, because you can draw them in advance. So we got a nice, it says 0.707. We know just a tad lower is the 0.786 area, and followed up with a nice bullish engulfing candle here on August the 2nd. Let me get rid of some of these Fibonacci lines so we can get a feel for where it is likely headed to. Looks like that's all I had out there. So on the Gartley pattern, your expectation should be a bounce up to the 0.618 retracement of your A to D leg. That would say here about $99.33 or so is where we should see the U.S. dollar, Japanese yen bounce up to. Again, a nice bar out here on August the 13th. The last couple of days out here, just still trading with inside that bar, so that pattern has not failed or broken as of yet. Let's go take a look at the euro-yen out there. That is our favorite currency pair. This has been traveling sideways here for a couple days, but again, just use that same system here. Take a look at that wide-ranging bar here on August the 13th. What we have seen are three small-bodied candles. A close above 130.45, and that's what would really set up the C to D leg that we would take a look at here inside the market. So to try to put it together for you, where you've got the VIX above the 50-day, you've got things coming into support areas with it being the summertime, and take a look at this currency pair here. A close above 130.45 will be a continuation move. And I suspect that continuation move would take us probably to the 0.786 retracement level, around 131.70, which could put a little bit of energy for a little bounce in the dance step of these markets. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. A real flat market out here. Dow's up 5. S&P is down 50 cents. Composites up 6 points. Russell 2000 up 60 cents. Quite a wild ride if you were trading the Shanghai last night. In a matter of 2 minutes, the thing went from being negative to up 5% out there. So they're investigating that. It'll be interesting to see. Now, it had at the bottom here, when it formed this little 1.272 butterfly pattern, formed one of the most powerful hammer candles that you can see out here. Why do I say that? We'll take a look at that long-legged shadow that we've got out here. I mean, this is a very powerful reversal signal, especially when you have formed one of those butterfly patterns, a Fibonacci expansion, something along those lines. Now, what we saw take place yesterday, this did finish at a loss yesterday. They say that the volume is real, and there was big volume inside the Shanghai yesterday. You can see the exact opposite. So you got the hammer candle at the bottom, and you got the shooting star candle at the top out there. So now we've got a real fight between the bulls and the bears, if any of that was real. So, but I don't know. In that 2-minute time frame out there, kind of a suspect. Let's go to no, Daryl. Okay, got it. Got a quick message there. In any event, let's continue looking around here just for the last about 3 minutes. Let's take a look at Goldilocks. Gold moving through a B point yesterday with volume. So we had wide price spread and volume. The B point was July 24th. Did 159,000 contracts. Yesterday up with 120. No, that can't be right. Must have my volumes must be messed up here this morning. We did get through that B point with volume. That says that gold should move up to the 1440 50 level out there. A little bit of short covering. Unfortunately, the CFTC data is not going to show me what took place yesterday out there, but that's okay. I know that the non-reportable group, they, there was no short covering rally other than really potentially yesterday out there. But there's more to come. I guarantee you. That wasn't maybe the final short covering rally in this next leg up here will be about a 100-point move. 1360 take us to 1460, something like that, which would take us into the 200-period exponential moving average. If we take a look at silver here, silver, what an explosive move after making that 0.618 retracement back on August the 7th. Silver now is above the 1 to 1.618. A to B equals CD. You can see that leg on that C to D leg, extremely powerful out here. That says silver is headed to the 1 to 2 level, 2387. Probably going to go up and test that 200-day exponential moving average. That's that little green squiggly line. That price point is about $25 out there. So that is probably where silver is headed to. Light sweet crude, that's headed northward. That's going to go up and at least test 109.32. But it's just, not quickly, it's just slowly moving up. It wants to head all the way up to the 114-ish level. Bonds here. Bonds breaking through the swing point. Yesterday was a test of the swing point from July 8th, which had 427,000 contracts. It tested it with lighter volume, but today closing below that. So bonds looking pretty bearish unless they can reject that again. A second-day rejection, which would mean a close above 132.02 out there. Natural gas here looks like it was pulling back just a bit. That had that nice key reversal session. Had the whole kit and caboodle on August the 8th out there. And we're going to take a look at during the Nadex Bull Bear binary option hour, which is coming up next. We're going to take a look at U.S. home construction market because there were key reversal sessions, or looked like key reversal sessions all over the place. So we'll go digging around, see if we can find any morsels. So if you're off to start your weekend, folks, have a great weekend. I will look forward to seeing you on Monday morning. Again, no possible way for the bulls to take the market by storm today. Be careful because that the VIX is up above that 50-day exponential moving average. Remember, folks, you have an amazing power within yourself, and that power, it's so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend. Look forward to seeing you on Monday. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.